Mortgage and Real Estate Playbook with Cathy Sabater, mortgage broker and proud veteran. So the feds cut the rate again. But really, what does that mean for you? We, as far as the market is concerned, were already prepared and pricing was already affected by the fact that the feds were gonna, what, two times before the end of the year. So right now we and then we'll see what's going to happen with the second one, right? Now, when we're talking about the Fed fund rate, how that affects you is that it helps with the interest rates, but sometimes the market reacts so quickly that it actually makes interest rates go up. Or in the headlines, it says interest rates are going down. What you need to understand is, hey, what's the difference between the interest rate and the APR, annual percentage rate? Because now you could potentially get a lower interest rate. However, you have to ask yourself, how much is it going to cost me to get that done? Okay. So the fact that they reduced the federal funds rate, that's the interest rate that the banks charge each other, right, for short-term loans. So most people think, hey, rate cut, and think, great, my mortgage just went down. But not exactly, right? Because most of us have 3% or lower in regards to our mortgage rates, which we know for a fact. We hope that we never have to refi that out, or we just get a second, right? A Heloan or a Heloc to actually help us pay off debt or get home improvements, right? So the feds don't directly set the mortgage rates, right? What they influence is the overall direction, right, of borrowing costs. So mortgage rates are tied more closely to what? To the bond years, especially the 10-year Treasury and the mortgage backed securities, AKA MBS, right? So I know I've spoken to a few that wanted to refinance, and I said, take a look at the what? US 10-year Treasury, because that's the rate plus or minus 2%. So the Fed rates, it's often a signal that the inflation is cooling or that they're trying to stimulate the economy activity, right? That move, right? That can make investors more what? Confident about buying bonds. And buying bonds, that's what usually helps mortgage rates drift lower, right? Because when we're in COVID, that's what the feds were doing. They were buying the mortgage backed securities, and that's why we had interest rates so low. Once they stopped doing it, then we had an increase in it. Okay. So let's talk about what this means for you. So if you're planning to buy a home, this could be your opportunity window. Even a small drop, say a 1/4%, can make a big difference in what? In your monthly payment and your overall buying power. Okay. So, but remember, when rates drop, right, competition tends to increase. So make sure you're pre-approved early, right? So this is why I try to tell people and be ready to move fast when you find the right home, right? So it's better to have a check that you can write, right? So you could be pre-approved, and then when you find the right house, I'll let you know what your payment will be based on the current rates, but at least you are prepared. So if you're a homeowner, this is a great time, right, to review your mortgage strategy. Maybe your high interest debt, maybe you're thinking about remodeling or a home upgrade, or maybe you just want to shorten your loan term, and that can save you long-term interest. So if you have a 30-year fix and you're thinking about maybe I should get to a 25-year fix, maybe that would help me. But remember, your interest rate has to be a certain way that if we do the refinance and reduce it by 5 years, that your payment is almost the same. Okay. So give me a call at 619-846-2675, and let's start the plan. What is it that you want to do, right? Do you want to pay off your loan in 30 years? Do you want a short amount of time? At the end of the day, I don't want you to chase a lower rate. I just want you to have a smarter strategy. Okay. So that's what I help with people every day. So let's zoom out. And the bigger picture is with this Fed move, we're seeing a ripple effect across housing and lending. As we all know, in most zip codes, there's more inventory, right? And at the end of the day, sellers are getting more realistic with pricing. And buyers are what? Stepping back in what they want more confidence. Right? Because if the rates keep going up and down, what would you want to do? So this is going to continue because interest rates have always been going up and down. We just never ever saw rates in the threes and the twos before. And we may not see it again for another, hopefully we don't have that kind of catastrophe for it to happen, right? So we do want to see a balanced market again and not the chaos, right? Because in COVID, we had bidding wars and that just wasn't sustainable. And we definitely had double digit equity, right? But the good news for everyone is that if you're waiting for the right time to move, when's the right time? Well, I'm going to tell you when you are ready. And that's why we tell you get pre approved so that if the right house comes about, you're ready. You could write a check and say, hey, I know what my mortgage is going to be. I feel comfortable where I'm at versus you're trying to time the market, right? So I say get pre approved. And when you find the right house, right, then you can make an offer. But if you're going to be chasing it, what are you going to do? Right? So, what's your next move? Right? If you're curious about how this Fed fund rate could affect your mortgage or refinance plan, let's just talk strategy. Right? And then we will prepare a plan just for you. I'll walk you through what your options would look like and help you explore your buying power and make sure you're getting the most of your home's equity because that's the key, right? If you have any other questions or concerns, feel free to give me a call and I'll be looking forward to helping you because your mortgage isn't just a loan, it is a financial strategy. I look forward to seeing you again. Cathy Sabater, mortgage broker, proud veteran. I'll talk to you soon.